I think the situation is the trough has been reached. As to whether it will have a strong recovery going forward is yet to be seen. Our best estimate now is that by the second half of this year, there will be a stronger recovery than we are currently seeing. But our assessment is that the trough has been reached.
Let's talk about net interest margins. This is something we always watch in banking sectors as a key gauge of profitability, yet fell to 1.56% versus 1.77% a year ago. And indeed, net interest margins have been near record lows. What can you do from here to be able to offset those low interest margins? Samuel?
As you would have noted, our net interest margin on a year-on-year basis has declined. However, if you look at the trend on a Q-on-Q basis, third quarter versus the fourth quarter, our net interest margin is up by 2 basis points. And the reason that we're able to do that is that we focus quite a bit of managing our funding profile as well as the funding cost. Our CASA ratio has now increased to over 60%, which is a record high for the bank. And CASA ratios are lower interest-bearing deposits. So we are addressing that. On the gross yield side, meaning the loan pricing, I don't think we would be able to do a lot in that area, but I think on the funding cost side, our ability to manage the funding cost has actually reaped good results with a 2 basis point increase in NIM for the fourth quarter. So on a trend basis, it is stabilized definitely, and it probably will inch up a little bit going forward. But all of this will depend on the market interest rates. If the market interest rates continues to be low, it will not go back to the 2019 level.
Would also like to talk to you about trading flows as well, because it's one of the big stories of this pandemic, of course. And you saw net trading income for the full year 2020 falling at 12%, but treasury income from customer flows growing 12% year on year to a new high of $668 million. Do you see that trend continuing?
Our trading income includes the mark-to-market impact for our Great Eastern's insurance portfolio. And as you know, when the interest rates start to come down, we discounted the liabilities, then we have a high level of liabilities, which then enters into the mark-to-market line of the trading income side. So that was really the Great Eastern Insurance long-term investment portfolio related, and it's liability related. With respect to the customer flow, however, the customers are taking advantage of the low interest rates and try to enter into hedges so that they can be locked in at the low interest rate environment. And that has gone up quite significantly for last year versus the year before. And I think going forward, should there be views that the interest rate may rise sometime in the future, I'm not talking about short term, but I'm talking about beyond the medium term, I think there will be continue to be hedging activities that the customers will enter into.